Hi, Teresa from FE here. FE is a lead management platform built for mortgage brokers, with superior functionality designed for a better customer experience. FE has partnered with Rate City to give brokers the opportunity to purchase verified leads and appear on their high traffic comparison website. For more information, go to fe.com.au.
Hi everyone, it's great to be here. At Heartland, we've helped over 21,000 seniors live a more comfortable retirement using our reverse mortgage. So if you're interested in diversifying your business and helping your clients later in life, become a Heartland broker. We offer specialised training, a dedicated broker support team, an online application submission tool with marketing resources to help grow your business and meet the needs of today's market. Feel free to get in touch with the Heartland Broker team or visit our website at heartlandfinance.com.au.
Hi guys, I hope you're all well. This is Darren Loads from Insurance AdvisorNet, and for those of you that don't know, we're the insurance brokers for the FBAA and the preferred PI insurance providers to all their members, and have been since 2000. Just quickly today, the current state of the insurance market is probably as hard as we've seen it in the last 20 years. And most commercial insurance is going through a period of around about 10 to 20% increases. So it is pretty tough out there, and that is flowing into PI insurance as well. On the plus side of things, I'm happy to report that we've recently just renewed our facility with Allianz, and our premium rates have been locked in unchanged again for another 12 months. So for those of you that aren't taking advantage of the exclusive package that we do offer members, please keep us in mind and give us a go when your policy is next due for renewal. You can find all our contact details on the homepage of the FBAA website, and we look forward to being of assistance to you. Other than that, stay well. I hope business is good for you all, and look forward to catching up with you at the upcoming national conference. Cheers.
In response to COVID-19, the federal government are offering small to medium businesses the opportunity to access the Boosting Apprenticeship Commencements. The subsidy covers 50% of new eligible apprentice or trainees' gross wages paid in the 12-month period from the date of commencement, up to a maximum of $7,000 per quarter. Trainees must be signed up before the 30th of September 2021. Contact us today to find out more.
Hi, I'm Siobhan from Pepper Money, and we are really excited to be sponsoring this year's FBAA eSummit. At Pepper, we provide a variety of solutions, including real-life home loans, personal loans, loans for professional equipment, and commercial mortgages. We would love to speak to you today about how we can help your customers.
Good morning, everybody, and welcome to the very first eSummit of 2021 for the FBAA. It's great to be back, and I'd like to thank you for joining us for the Open Banking and Digital Financial Services Summit here in Victoria and Tasmania. Just making sure, guys, that you do have some audio on at the moment, so you will need to make sure that you do have your speakers on. And if you can't hear me, just let us know down in the bottom chat box as well, and we'll see what we can do to get that fixed up. At the moment, there is currently some thunderstorms heading over Brisbane, so there could be some dropout points. And if that does happen, Brett Spencer will take over in place of where I am at the moment. And for those of you that aren't aware, Brett Spencer has been brought back onto our council and our state presidency in Victoria, and he's been joined by some new councillors, but I'll let Brett go through more of that a little bit later on. Please share your webcams with us this morning, something a little bit different. We're encouraging you all to turn them on. It'd be great to see your faces, especially with the lockdown in Victoria at the moment. We do hope that you're all travelling well and that you have managed to check in on each other to make sure that everything is fine. And, you know, we hope for you guys and the sake of all Victorians down there at the moment that this one won't last too long. So for today's session, I guess it's about time to get started. There is 1.5 CPD hours that are going to be allocated to each of these summits. As most of you know, the summit is running over 2 days, so it is going to be running for today and tomorrow. Brett Spencer will be hosting our session tomorrow morning for you as well. You'll receive an email with the CPD code and survey that will follow today's summit. So tune in through the whole webinar and make sure that your attendance is marked off, and we will make sure that you get your CPD code so you can log that on your trackers. We'd like to thank our sponsors for their support. It has been a very tough year for you guys down there coming in and out of COVID, but these guys have stood by you the whole time. So the likes of the ALIs, Bluestone, Finstro, Prosper, Heartland, Suncorp, OnDeck, Speedy, Affordable Staff, Insurance Advisor Net, Lend, Pepper Money, Strive Financials, AAMC, FE, Credit Fix Solutions and Trailbook Loans, all of which have joined us for a fantastic year ahead of the FBAA. You'll also get their contact details in a follow-up email after today's session. So for FBAA members, please don't forget that for every person that you refer over to us, you'll also receive 10% off your membership renewal heading into the next year. If you're not an FBAA member and you're on this call at the moment, we haven't forgotten about you either. We do have our MTI program, which means that you can transfer over from whatever association you're currently with, and you can have a membership with us for free, so you're comparing apples with apples. And it makes sure that come renewal time for your association, you will get both renewals at the same time and make a decision as to staying with both, or hopefully you'll choose us over the other. The FBAA Broker Support Program is also still available to all members for anybody that is suffering some sort of financial hardship at the moment. If you need assistance with payment plans and things like that with your renewal coming up, please do reach out to either myself or the memberships team at the FBAA. The crew is only too happy to help you guys out. There is so much that we can help with when it comes to that as well. We've also got our new website that is now up and running, and you all would have received a very strange email from us a few weeks back asking you to change your password. If you haven't done that yet, please make sure that you do jump online and get that done as soon as possible to start gaining the benefits of the new FBAA website and what's available for our members. It also has access links to general support from the FBAA, a brilliant Call Your Broker marketing campaign that you can use through social media, general support services, as I said, some mental health access areas. It's not just available for you, but members of your family and your staff as well. And you can access all of the videos that the FBAA have done over the last 12 months in there as well. The agenda for today's session was on the registration setup. So if you've got any questions about that, again, please pop them down in the chat box and we can run you through it. So to commence today's session, we're going to hear from FBAA Director Peter White and Nigel, the CEO of Two Red Kites, on the tech space today and where it's likely to go in the future. So Pete, I'm going to hand over to you and Nigel.
Thanks very much, Leah, and welcome everyone again to today. Also, I do want to say thank you to Senator the Honourable Jane Hume for the opening address that she's giving. And we look forward to hearing from her not only through these sessions but also in the future as well. I'd also like to thank Nigel, who's joining us this morning. You there, Nigel?
Hey.
There you go. G'day, mate. How are you?
Very well, thank you.
Good, mate. Good. Thanks for joining us. Today we're looking at, I guess, the future of, or where the future is going with technology in the financial services sector and within broking businesses, and just in general where that market is treading. And I think it's very timely after coming out of the back of COVID, where we did everything digitally. It worked for some, not for everyone. And so we have a mixture of face-to-face and digital these days. But I think it'd be great to get an understanding of a few of the things that are happening now, as well as your view on where you think the future's going in regards to within technologies within businesses, and hopefully give some people some understanding directions of maybe what they should be doing in their business. So Nigel, I might just sort of start with a bit of an opening thought, just a general thought from yourself as to where is tech at the moment? I mean, there's so much talk about blockchains and AI and all this sort of stuff. Where really is the tech space at the moment? And where do you see it going in the next, say, 5 years? Just in a broad general sense.
Absolutely. Okay, so the tech industry is actually going crazy at the moment, as you can imagine. As you know, a year ago, you couldn't buy a webcam. That's a great example of how everything changed. People needed webcams to do Zoom calls. The same's happening with people realizing that they need to put their tech in a place that everyone can access all the time, securely, of course, instead of the old way of you need to be in the office, access this document, work on it, and then finish working on it. That was let's say the old way. Now, so tech is going that way forward, as well as we're getting a lot more of the interesting security things, like it's now actually at the point that if you're talking about blockchain, all we think about blockchain normally is dollars and cents, okay, or Bitcoin and things like that. But they're using that same type of technology for now property transfers and things like that, to track a property transfer. And you've got now a unique identifier saying this was that particular property transfer, and you can keep the chain of events of that. So there's some really interesting, and other people are using it for contract management, so that each change of a contract is recorded into the blockchain as a key, and you now know that that contract was that particular format at that moment in time, so that if someone did make a change to it in some way later, you can verify it against a blockchain, which is something that can't be changed. So,
and now that's really interesting because just see, and look, sorry, I probably should have let everybody know. Nigel is our tech expert at the FBAA, and he's doing a whole lot of software developments for us on our CRM and so on. And Nigel runs a business called Two Red Kites. Now, Nigel, I got to ask this because it's been burning me forever. Where did you get the name Two Red Kites? Tell me about how does that interrelate with technology?
Okay, so our main language that so my previous partner and we actually put a whole day aside. I don't know if anyone's started up. I've started up multiple businesses and sold them off and done all those type of things. And my business partner and I put a day aside to actually go try to pick a name. And we had our pre-SQL ideas of cloud, because we do a lot of stuff in the cloud. Our main language that we write in is called Ruby, which is red. And there was two of us, and we came up with two, red for Ruby, and kites because they're in the clouds. And we didn't want to have that tech stuff or tech this or tech that type company. We wanted to have something that was a little bit different. We now abbreviate that. This is my new shirt that I've only just got, and I'm trying to go over the top, but we now call ourselves 2RK just to make it a little bit simpler for people as well. But that's where that came from, and it's a little bit unique, and hopefully people remember it. So as I say, funny name, but serious business.
Very good, and I certainly remember it. It's thank you for sharing that. That was a little impromptu, but and it's always interesting how names get developed and what's sitting behind. Well, I find it fascinating anyhow. Thank you, sir. Coming back to what you're saying, I was just, as you were talking before about the connecting chains of events through blockchain as such, and what that looks like as to how you get a UIP, a unique identifier, and so on with it. It's for someone like me who's been in the industry for a long time. I remember back to a thing where the land title of a property was called a chain of title. And when you transferred a property between owners, you'd get in settlements a stack of paper like this, just a monumental stack of paper. And you had to go through line by line by line of the chain of title to validate its authenticity and legal ownership of the property and transfer the property. And it's almost like it's taken that old process that then became a Torrens title, and it all changed from there, into a digitized form of that style of thought process to validate the entire chain of history of events, that it's all good and all legal. Is that a fair assumption?
Yeah, and look, we build, so probably the background here is, and I think where Peter was going before is that there's going to be some really exciting new things everyone's going to see shortly from the FBAA back-end system, which is going to be really exciting for you, which we're working on at the moment. But Two Red Kites actually do lots of building, from consignment systems through to a bereavement support system through to babysitting systems. So we've worked in so many different domains, and it's a lot of fun because of that. But one of the things that we get really worried is when someone comes to us with a, hey, here's something totally new, we want to do this. And there is no previous process. They don't even have a paper-based process for it. And we're going, okay, you need to at least do it in paper first, prove the concept, because paper can get changed really quickly. Okay, once you write some code and you're stuck with that, it costs money to change. So I'm a firm believer that it's really important to work out those paper-based processes first. Remember that those paper-based processes won't flow straight into web-based processes, because in a paper-based one, you might have a compulsory field like last name, but you'll still hand that form off to the next person without that last name in there. A online form is going to say, nope, you can't submit that until you put that last name in. Okay, so you have to remember those type of things, but you're now getting a lot more control over that environment. So that's, I believe, you have to watch how those things work, and then it's just a standard growth pattern for them.
Sure. And is that sort of like the first base if you're going to customize your own software? So yeah, we look at that customization process. I remember going back 10, 20 years, maybe longer, back in the very early days, if you went to a developer to customize software for you, you sort of double the time frame and double the cost, and you might be getting near the mark of where it's going to land. Very different world these days, but I mean, it principally is that what you do. You take your paper process, map it out, and then build a customized software underneath that so it suits your particular business rather than a box off a shelf.
Exactly. So funny enough, like even yesterday, a client that I had that was, oops, got something popping up. Okay. A client that I had yesterday that was actually, and their company is actually called Poles and Holes. Okay, so they actually do electrical poles at construction sites, and I guess you can guess what the holes is all about. And they basically, I gave them a proposal for a custom solution because they had rewritten their original application in Access database, and they had the ability for multiple people to use it. So, and they actually got, they went, okay, I'm going to use an off-the-shelf product to do this. It can do everything we can do, and it's only going to cost me $200 a month compared to, say, $20,000 or $30,000 or $50,000 to develop it. And they actually called me yesterday and went, okay, we realized it created so much extra work for us having to try to follow somebody else's process, not our process. And I always say it's the cart pushing the horse. It's an old saying, but you know, it's a very valid thing where the cart is actually pushing the horse around instead of the horse pulling the cart. Okay, and you're being controlled by their processes, not like, let's use Salesforce as a great example there. You're controlled by their process, and if you have some specific process or workflows, you can't easily set them up yourself, and that's the big thing.
That's very much the case with the FBAA. We are with Salesforce, although we're transitioning onto your new system, and I gotta admit, it's been a bit of a nightmare, to be honest with you, and extraordinarily expensive. And every time you sneeze, something breaks, and it's more costs, and just never.
But can we just confirm this? You're talking about Salesforce here. It sounds like you're talking about my system. No.
Your system. Well, we're not on your system yet. We're waiting to get on it. I can't wait to finish it off. So we're close to that.
It is. Salesforce is now the new SAP, and if everyone knows about SAP, if you've ever had to get an SAP, so it's the big accounting system. It's like the top end, accounting system, and you're talking. You pay $1 million for the software, and then and then it will be another 2 or 3 million to configure it the way that you want to use it. SAP is what was used in Queensland Health and didn't pay all the nurses and all those type of things. So that's the scenario that is now happening with Salesforce, and a lot of people are getting stuck in that situation. It's a great product, but use it for what it is, not for trying to make it into something else. So,
Well, thank God we haven't spent millions, but even in my head, we've probably spent way too much on Salesforce over all these years. So I'll be happy to get out of it, let me assure you. So tell me more. Let's talk about the cloud. Tell me a little bit around what online solutions and online tools, how they benefit a business and how they can be used a bit within a person's business.
okay, well, the obvious one is Zoom. Like, don't you wish you had bought shares in January last year of Zoom? It's now worth ridiculous amounts of money. But
Afterpay was the other one I should have bought shares in.
Exactly. Yeah. Tools like Zoom. Now, being a development company, we actually can work totally remote, and I can use a totally remote team if I wanted to. I could use a team that is overseas. I choose not to because I like to be part of the community and have a local development team, but it would be 5 times cheaper to use Ukraine resources or stuff like that. And one of the things that I did find is using Zoom. I think Zoom is one of those great products that everyone's jumped onto. Excuse me, I have to stop for a sec because I'm going to have to cough. So, Pete,
you do that? Well, Nigel's coughing. One of the things that we did in the FBAA is that we transitioned from everybody working in the office to, well, obviously in COVID, everybody had to work from home, but then we came back into a split system. And I can tell you, I'm a bit old school. I was dead set against people working from home. And then as through COVID and we came out the back end of it, I said, I'm dead set not going back to the office. So anyhow, we worked the split structure when we got back. So we had staff that, we worked 1 week in the office and 1 week from home. And we did that for, a couple of months. And then the staff turned around and asked me, well, look, what we would like to do is to work Monday and Friday from home and Tuesday, Wednesday, Thursday in the office. And I said, well, that just sounds like a long weekend to me. So we cut a deal and said, well, look, so long as KPIs are met, so long as we continue to grow, I'm good with it. But if you don't, you lose the lot. So today, it has been extraordinarily successful. And we have, as Leah would be today, she's probably working from home by the looks of it. I am, although I've got to go get on an airplane soon. But we have this split arrangement. It works extremely well for a work-life balance. And I think that the way we've embraced technology, even though we got a bit of an overload last year, all that will rationalise out and balance out. So the ability for cloud solutions and improving systems so you can basically work from anywhere, I think is fantastic. And hopefully, Nigel, you've got control of the cough, mate. There's nothing worse, is there?
No, I knew I was gone. What I actually found, this was an interesting thing that actually was the downside of being totally remote was, and maybe this is my old school part of it, but you don't pick up on some of the verbal cues that you would in that if you see people face to face. And I found, so we actually worked on, we go back to the office 1 day a week, and that was, I call it more of a social day. I could actually say the productivity is lower on those days than it is when people work remote. But it's a good thing because we're human, we're social animals. So I think it's still an important part of it. So
I couldn't agree more. That getting together, and we're social animals, but that meeting, getting together in the office, I think is crucial to get the balance right. Because otherwise, exactly. It happens in many other areas that the pendulum swings too far the other way, and you lose that balance. Which, to me, in my philosophy, I operate anyhow, you lose that harmonic in your life, and then nothing seems to go right. So exactly. I think it's fantastic. Yeah.
So just quickly on the other side of it is IM. So like Slack or I forgot the Microsoft equivalent. Yeah, I think. Teams, Microsoft Teams, okay. Those type of tools for async communication are really important so that you can send messages to a group. You might send it to a team that might be just related to one particular project. As you probably, I don't know if you know, Peter, but we're actually using Slack while we're doing this project. It's allowing your team to actually talk directly to my team so that you don't have to call every time. They can put what we call an async message in there, which might not get replied to straight away. It might not be important, but it's better that way than using all that time trying to call people all the time. So, and then having your resources online, I think that's the other important thing. And most of us do that these days with our documents and other things. So those are probably the three key things.
So tell me, where is the future going? If we said, what does 10, 20 years from now look like? Where do you think all this goes? I mean, do we wind up getting rid of the human being out of the system, or is technology real the grunt worker as such as we go forward? What are your thoughts?
AI is amazing. Like I've got friends that write software that is used in drones that fly beside the high tension lines, and they can, as the drone goes around each insulator, and it can via AI on the spot go, yep, that one needs replacing. Yep, and then it goes to the next one, and it just does things like that. So instead of you got people trying to walk on these high tension lines, which is pretty crazy stuff anyway. This is doing that automatically. So AI in data, we wouldn't have had a COVID vaccination if it hadn't been for AI, because you're talking huge amounts of data, and they push this through to basically say, here's the result we want, here's all this data, compare them, and then give us the thing. And that's what they're using AI type technologies against to do. So I actually saw one example where they're using DNA streams, and the amount of data is it's immense that we're talking about. So and a normal processing of that just doesn't work. So that's our future in that sense. The other thing I'd say is, if you've got if you want a future thing like car parks, I reckon they're going to don't invest in car parks in the city. You'd be hoping one day that you'd hope in the near future you'd have the ability that your car takes you into the city, you get out, and it goes out of the city somewhere and parks in a car park outside of the city and charges itself, and then come back and gets you when you want to leave work. Okay, maybe that's a thing. I don't know, but I'm just I'm putting silly things of like the whole city complex is going to change, and what happens in cities is going to change with the amount of people and who needs to go there and how you get there and get back. So
look, I agree with you on that. I think it'll be very interesting in the coming few decades as to what capital cities really look like
exactly
compared to where they are today.
Well, I took it.
Mate, look, we're out of time. Fascinating chatting.
Oh, sorry. No, I was going to go into another tangent, but we were out of time. So.
Yeah, we've got the end of our time for you, but we will continue this conversation another time because it's fascinating. So hopefully that was of interest to people watching and enjoyed understanding a little bit more of what's happening with technology and how you can consider using it otherwise. Nigel from Two Red Kites, mate, thank you so much. We'll look forward to catching up with you again soon, and appreciate your time today.
Thanks, Peter. Thanks for this opportunity, and everyone have a great rest of your day. Stay safe.
And guys, just while I've got Peter and Nigel online still, guys, if anybody does have any questions today, please feel free to pop them down into the chat box and we can read them out live to Peter and Nigel. Alternatively, you can send them through to the events team at head office on events@fbaa.com.au, and we'll be able to read them out. But for the time being, guys, it doesn't seem like there has been a great deal that has been sent through. Nigel, I've only got one question for you, though, on the security of obviously using cloud tech. Is it the most secure system out there that people can use?
Look, there's always, you have to be worried if you're on Google that maybe Google will use your data to work out other things. Now, you could imagine, what I could probably say is any tech that you have, I've always said a tech person controls the business. Don't think the CEO controls the business. If you've got a tech department, they control the business, okay? They have access to every document, everything in your whole system, okay? And they could look at anything. They could look at anyone's email. They can do all those things. So if they really wanted to, they could. Okay. At least with when you've got it in the cloud, does someone really want to go look at your information? Maybe there is a Google, but they have lots of safeguards to prevent that. I actually have someone that writes software that actually does, that works with Zoom that will do the meetings, and he had to actually show his security protocols to show that no one internally could access any of the transcripts from any meeting and all the other processes from that. The other side of it is Google does actually have a feature that will allow a tech person to gain access to someone's email account, but it will notify and record that that's happened. Okay, so at least you've got some auditing there, and I think that's really important. Auditing is the most important thing. And I actually try to say to people, especially when we build systems for people, don't go too heavy. Security is a double-edged sword. It's a great thing, but it's a pain in the proverbial as well, okay? Because what happens if you have to get that order out, but you need to change it by 10, but that only person allowed to change that order is out at lunch or something else, okay? They're away that day. So it's much better having the concept of anyone can change it, but everything's recorded and audited and logged, okay? So if anyone comes back later and says, who changed this? They don't have to shout out in the room saying, hey, who changed this? It can be, Peter changed it. So, it's that type of concept. So security, I believe, is there. Use two-factor authentication if you can. It's really important. And don't do the Facebook, what was your favorite pet's name and all those type of things, which are trolling ways of trying to find details about you that they can use for your passwords. And don't use unauthenticated, unsecure wireless networks as well.
I think that's some really valuable advice that you've given to our members today that are on the call. So Nigel, again, as reiterating what Peter said, thank you very much for your time. I don't know how Pete feels though with the comment that the CIO is in a better position than what the CEO is. I'll let you guys battle that out because that's a death wish for me waiting to happen. But very valuable information.
Thanks, Leah. I was right across that one. We'll be having conversations internally.
Well, funny enough, it's actually not the CIO. It's actually probably the absolute techs below him that have the more access than anyone else. It's crazy, but it's true.
I think what Nigel's trying to say here, Pete, is we need to keep a very close eye on him and what he's doing. So guys, again, thank you very much. Yeah. I'm sure that everybody did get a lot from today's session, especially with the two-stage authentication. I know with the FBAA, that is something that we do definitely have in place at head office with all of the systems we have now running on a two-step yeah, that one, the big word. So we've definitely got the 2 stages there that we need to do to log into any system, and we can give our members an assurance that everything has been security checked. The new website's been security checked as well. And there's been a very rigorous process that's gone on behind the scenes for that to take place too. So Nigel, it's a big thank you to you and your team for the work that you've done for us as well.
My pleasure. Thank you very much.
Not a problem. So guys, no, that's okay. It's all right. We'll just tell the world you've got COVID and we'll move on from it. So guys, just like to now welcome Mary Digress from Credit FIG Solutions to the floor with me. Mary is going to be outlining this morning how credit impairment impacts the process flow and getting the appropriate applications approved by online lenders. So Mary, good morning. Welcome back to the ePanels for us. It's great to see you.
Thank you,
and look, Leah. You're looking so well down in lockdown in Melbourne as well.
Oh, really? You know, when you stare at 4 walls, you just have to put a smile on your face, Leah, and just keep going.
Definitely. I'm going to hand the floor over to you. And guys, like we said, if you have any questions, please pop them down into the question box.
Thank you. Hi, everyone. I hope you're well. I'm Mary Digress on behalf of Credit FIG Solutions. I look after Melbourne and Tassie brokers. Now, I guess through COVID, what I've seen is brokers are paying more attention on credit reporting. You know, unfortunately, there's not enough education out there for brokers to understand what a credit report is and understand what it means. For example, a score that is below 500 can impact your application. I think it's imperative with what we're seeing and what we're living through for every broker to conduct a credit report. And there's a few things that you can identify on the credit report. One is obviously the credit score. Also have a close look at the VITA score, because there are some lenders that do VITA score rather than, you know, scoring normally. Now, what the VITA score is, it's algorithms that Equifax have created in the background, and it's showing the lender the type of customer this can be in about 12 months time. So when you're conducting a credit report, the general score may be high, but if you look at the VITA score, it can drop drastically in regards to the algorithms and the type of customer. So please get in the habit of looking at that as well. Now, through my experience and working closely with my brokers, you know, a score can be 500 or below 500 actually, and they're finding it hard to, you know, place them in a proper mainstream lender. They do approach me, I have a look at the report, and it can be simply removing a couple of inquiries. Now, as you all know, buy now, pay later schemes are a thorn on my side, you guys. Lenders don't like them. Even if customers make a general inquiry on the internet, it can deduct 70 points. So even though a customer may not proceed with that application, it does deduct 70 points. So if the score is a bit low, have a look at that. Have a look at the inquiries, the number of inquiries. Now, with the tightening of credit policy, a customer may have a small default, and if their repayment history is not right either, there's blemishes on there, it obviously reduces the score drastically. So get in the habit of looking at that as well. What we do well is we remove defaults, we remove judgments. We do have a 90% success rate. Now, by removing a default, we're not disputing whether a default's been placed on there incorrectly. At the end of the day, a customer hasn't paid an invoice, and as a result, a default's been listed. But what we're finding is that defaults are being listed really quickly without, you know, fully making the customer aware. So what we do is we investigate thoroughly why the default was listed in the first place. There are legal protocols that a lender needs to follow in order to list a default. So we investigate these really closely to remove those defaults. And as a result, when we do remove a default, it can add 300 points back to a score. So it does make an amazing difference. You know, I work closely with my brokers, you know, to read a report, to just try and give the customer an opportunity to enter into the lending market and to have better options in regards to what is available to them. You know, there are non-conforming lenders that, you know, offer lending. However, as we already know, the interest rates are extreme. I do come across customers that are first home buyers, for example, and the broker submits an application. There's finance clauses, and something may appear on a credit report and they get an auto decline. So by conducting a credit report up front prior to you guys submitting an application, we can take a look at it, look at what it looks like, fix the blemishes, and then submit your application, and formal approval should be issued quicker than normal. So that's what we do. We are a no result, no fee. So I do vet the credit reports, and I do provide honest feedback to let you guys know whether an application can be successfully, you know, have a successful outcome or not. Again, we're a 90% success rate, and we're, I guess, for you and your business, we're a add-on value. So reach out. I'm happy to provide free advice. I'm happy to, you know, review the credit reports, even have an education piece on how to read the reports and what is important on there. So Leo, back to you. I think I'm done for 5 minutes.
Oh, that's okay. I was going to say that was a really quick 5 minutes. But Mary, just want to ask. I just want to ask you a question.
On as well.
Oh, I love it. I just want to ask you a quick question though. What are the most common things that you're seeing coming up on people's credit reports at the moment?
You know what, Leah? About before COVID hit, we had lenders that would approve on the basis of a small default. We're now finding that, you know, policy is tightened. You can't mitigate those cases as easier as before. So they are approaching us to remove small defaults, even below 1,000, even below 200, believe it or not. You know, the score, there's more emphasis on a customer score. And it's really exciting when you say to a customer, hey, by removing a small default, your score can jump by 300 points. It just opens up just, you know, more options for them.
And are you seeing a lot more agencies now doing the credit reporting? So the likes of the Citibanks and NABs and everybody else doing the positive credit reporting. Are we seeing more of that take place now?
Yeah, good question, Leah. One thing I didn't touch on, given, you know, it was only 5 minutes. There's 4 reporting agencies for credit reporting. There's Equifax, there's Alien, there's Credit Watch, and there's Experian. So we're finding that if there's any red flags on an application, the banks are also ordering the Equifax and the Alien report. And both of those can differ. Information that Equifax has may not appear on the Alien, because, you know, it's how long, you know, it takes for them to update their data. So, you know, I would highly encourage brokers, if, you know, once they do their needs analysis, if there's red flags on an application, I highly recommend that they order both of the reports prior to submitting their application with the bank.
Brilliant. And I think that's some great advice to Mary as well, guys. There has been some questions come through as to getting Mary's contact details. They will come out to you after today's session. They'll be sent out on the email that Mariah and May send from head office. So all of the contact details for today's speakers will be coming out to you at the end of today's session. But Mary, thank you very much for your time this morning.
You're welcome.
I know that it has been a horrible time down there in Melbourne with lockdown as well. So we do wish you guys the best, and we hope to see you out of jail very shortly. I mean, the 25K limit's there, but we'd like to see you actually be able to cross borders and hopefully see you for our national conference up here in July.
I'm actually so looking forward to that. I can't wait. I just want to say to all the Victorians, we're in this together and we're nearly there, you guys. Just hang in there.
Brilliant. And I think that's the one thing, that the strongest message, that we are all in this together, regardless of what state we're all in, guys. So do reach out if you do have any questions to anybody that is on the panel, even myself. Happy to help you out where we can as well. So
Thanks,
guys, thanks, Mary, for this morning. I'm actually now going to invite on with me onto the stage in the panel floor my lovely sponsors from Finsto, Strive, Financial, On Deck and Lend. So Darren, Cam, Ben and Danelle, if you can join me with your cameras. And we're going to have the trivial hard-hitting session of our panel discussion this morning. It was funny because on your agendas it actually says we're going to discuss SLA's loan application processes. We're actually going to digress from that just a little bit this morning, and that's because we always have fun doing what we do there. And my panelists haven't been pre-briefed on quite a few of the questions that are coming up this morning. So guys, good morning. We can see Danelle's coughing with her COVID in the background at the moment too. It's great to see everybody back on the panel with us. And I mean, most of you I only did a short tour with last week down to Kingscliff in New South Wales. But it is good to see everybody this morning, and all by the weather that's happening up here in Brisbane, and the thunderstorm is still hanging around behind me. It's great to be back. And Cam, it's great to see that you're back in the appropriate webinar work attire.
Morning, legend. Yes, back in the hoodie, pair of trackies, just
Nice.
Living my best life up here on the beautiful Gold Coast.
Living the dream on the Gold Coast, where it's Queensland beautiful one day and freezing the next. And Donnie, great to see you back as well. We know that you've recently got over being ill as well, so we're hoping that the health is back on track.
Hey, thanks, Leah. I may, have that Chrissy Amphlett voice going on, so it could get worse as this call goes on. Starkey, don't you start coughing as well. It's not transmittable via Zoom. Yeah, the head cold's better, thanks, Leah, but the chest is still struggling a little bit. So I've got my Lemsip, which you can't see. Look at that.
I've got
my green screen's not working. Oh, there it is. There's my Lemsip. So I'm ready to go.
And this is one of the moments we can say is an epic fail courtesy of Zoom meetings and green screens. So it's one of those things, but at least, you know, most of the people have got their cameras off. We have encouraged you guys, if you do want to turn your cameras on, please turn them on. Just remember though, don't take the laptop to the bathroom with you at any point in time, because we can all see what's going on. So, you know, we do want to keep it all above board today. But guys, as I said, welcome back for the e-panels today. I am going to open the first question to everybody that is on this morning's panel. And Cami, I'll kick off with you, and then guys, if you just want to lead, or I'll call you out one by one. What is it about your product that sets you apart from other SME lenders, for better words? And for those that don't understand the acronym of SME that are on the call, it's our SME lenders. Cam, I will start with you.
Yeah, thanks, Legend. Listen, I guess what sets us apart from other short-term lenders, because we sit in a space that not many people are in. Number one, our ability to be really personal with our product, that you are dealing with the people that are lending you the money. And secondly, I guess, and more importantly, in that short-term loan sharky industry, is the fees and charges that are charged up front to your client. I bang on about it year after year after year on these panels, but we don't have any of those upfront fees or charges. Your client cannot get burnt with Strive Financial. It's impossible for them to lose any money and us not lend them any money. It's just not how it works. Because we're the lender, we make money out of the interest that we charge. We don't need to be charging application fees and establishment fees and desktop valuation fees and whatever else goes along with a lot of the other garbage that happens in the industry. So I guess they're the two things that really set us apart in the space that we play in.
Brilliant. And Danelle, from Lend's side of things, although you're a tech platform, what sets Lend apart from other companies that are out there doing what you do?
Oh, thanks, Leah. Look, probably the first one, which I know is really important to our brokers out there, and I'll call it out first. And we all know it's not about money, as Cam just touched on, as far as service, but we pass on 100% of the commission to the broker. So we don't clip the brokerage. If a lender is offering promotions, whether it be, you know, an end of financial year +1 or +0.5, whatever it may be, we pass all of that on to the broker. So there is no clip to Lend from that, which always has a second question: how do you make your money? So we'll just handle that right now, and that's on volume. So we make our money on volume. The second thing is we've got a really focused attitude on being able to effectively help brokers navigate change. So that is from just being a residential broker to being able to accept those commercial inquiries, having a platform that supports them. So it's not just change because you should, it's change and this is how you do it. And that's something that we're really proud of.
Brilliant. And Ben, I'll hand over to you at OnDeck. What separates OnDeck from other SME lenders?
Yeah, thanks, Leah. I'd say, yeah, all lenders in our space do promote ourselves in market with the similar traits. So speed, easy access to funding. I'd say with us, the main thing of our product that sets us apart from our competitors would be our lack of security required. So for all our loans up to 250,000, we actually require no security at all. So you will see some of the other lenders in our space above a certain amount will need to take a caveat. So we do have the ability to go up to 250,000 just with a director's guarantee and no security required. So yeah, it's definitely a niche product in our space without having to take security. So that'd be our
brilliant.
What sets us right, yeah.
Thanks, Benny. And Daz, over to you from Finstro's side of things. What separates Finstro from other SME lenders? And you need to unmute yourself, Daz. Kind of helps.
Certainly does. Where we're different is that most other SME lenders, their primary arrangement is to put their funding over a term being from 6 to 36 months, where that's fantastic and can certainly help with larger capital purchases. But where it doesn't help is for the daily cash flow of any business. Cash flow in any business is gold. They need that money to pay for a lot of things, from stock to staff wages to general everyday expenses and to rent. So whilst getting a sum of money over any kind of term is great, you know what your repayments are, but you could then held to that debt for that period of time. Through invoices, whether it be for debtors or supplier invoicing, what you're doing is that you're utilising your funds in a far superior way. So you're keeping the cash in your pocket to pay for things. And once that invoice is received, the debt is paid out. And with suppliers, once you've used the widgets that you've purchased, you've turned them into a saleable item and you're getting that cash in to pay it out again. So hence, no long-term funding arrangements.
Absolutely brilliant. So you're all very different in what you're offering the market at the moment. So what I'm going to do is bounce some scenarios around the table for all of you to consider. And what I'd like to see happen from my panelists this morning is the first question will be a yes or no. And if it's a yes, can you let us know why? And if it's a no, can you let us know why as well? So the first question, and again, Cam, I'll start with you for ease and simplicity for the audience today. If I was a startup company that had been trading for 6 months, but I have a high income turnover of $100,000 already, what would be the maximum amount I could borrow from you, and what documents would you require to facilitate this?
So ours is a little bit different there, mate, where we don't look at income generated. So we're purely doing security lending. So it would depend on what type, if the director had a property, it could be their principal place of residence. It would determine whether we could lend against that property or not. So we can lend against one-day companies, so they don't need to have a 6-month trading history or what have you. But it is all secured via either first mortgage or second mortgage or over plant equipment. So the $100,000 a month stuff doesn't affect us whatsoever. It'd be purely on what the client had to offer as security.
Brilliant. And Danelle, over to you as well. If I was a startup company that had been trading for 6 months with a high income of over 100,000, do you have a lender on panel that would be able to lend to that particular person? And if you are aware, do you know what the maximum lending amount would be and what documents they may require?
Absolutely. So yes, in answer to your yes or no, yes, we do have lenders on panel. And look, the system will really guide brokers, Leah, with the 6-month trade. There are plenty of options. Obviously, people like Strive, who are on our panel as well, Finstro, if you've got invoices. So there are options for customers that are trading for 6 months. What a lot of lenders are really looking for in this startup space when it is a 6-month term is consistent cash flow. So if you've been trading for 6 months and you've turned over 10 grand, 10 grand, 50 grand, 60 grand, 60 grand, and then 100, you're probably really going to only access about 30 to 50% of that monthly turnover. If you've already been working in the industry, for instance, which we see a lot of, so people who are working for a business and then decide to go out and do that for themselves, you'll often find that their cash flow will start immediately. And so therefore they will get anything up to 100% for a 6-month trade. However, if they're a B2B business and there's plenty of invoices up there, out there on their debtors ledger, then they'll be able to access that as well, the full amount of 100K.
Brilliant. Ben, down to you at On Deck. So same situation, same scenario at the moment, 6 months trading, income over 100,000. Would there be a maximum amount someone that could borrow? And if so, what are the documents that On Deck will require?
Yeah, so for us, we actually wouldn't be able to do this one. So one of our minimum requirements is we actually need at least 12 months in business. So that would have to be under the applying entity. If, for example, they had been a sole trader for more than 12 months, so let's say 3 years, and then 6 months ago changed their structure to a company, then we can consider it as long as we can show it's been the same business. But in terms of if they've just started up 6 months ago, new venture, yeah, unfortunately we wouldn't be able to do it.
Absolutely brilliant. Daz, over to you at Finstro side of things, 6 months trading, income over 100,000. Is there a maximum amount they could borrow? If so, what are the documents required?
First up is yes. Our minimum requirements are 6 months ABN and 6 months GST registration. So a business has been out for 6 months and turned over 100,000 in that period of time. What we would look at is very much to what Danelle led into, and thank you, Danelle, is that whilst 100,000 on an average would work out to be approximately 16,000 a month for that period of time, we would use that 16,000 and give it 150% metric to look at an approval limit of around 24,000. There are other things that we'd like to look at. Danelle touched on it, just getting that lump sum at 100,000 at the end of 6 months, that's not a good sign. We would look at the monthly arrangement of it all, but if it was fairly smooth through that period of time and consistent, they're the metrics that we'd look at, and we would look at that for either the cash, the supplier invoice, or the debtor invoicing as well.
Brilliant. So guys, next ballpark question for you at the moment. Let's use Bill Smith, because he's a regular guy in finance, especially when we're doing training. He likes to turn up on a lot of applications and documents. Bill's a popular bloke. But Bill Smith has managed a restaurant for over 15 years, but he's decided to go out and buy his own. So he needs finances we'll try that again. He needs finances for fixtures and fittings. Is there something you can look at, and is there any other finance you could potentially offer him on top of it? But Cam, I'm going to twist that for you on your side of things, knowing that that's ideally not the world you primarily lend in. Does Strive lend against commercial premises and residential premises, or is it solely residential premises?
No, most definitely. We lend against commercial property, industrial land, vacant land, residential property. Doesn't matter to us. The thing that's key with Strive and all of us business lenders is that the money's being used for business or investment purpose outside the consumer credit code. And if I can just touch on this for 1 second, I think a lot of people get confused that if the client uses their principal place of residence as security, then it's going to be a consumer loan. And that's not the case. What the client uses as security has nothing to do whether it's a consumer loan or a non-coded loan. It's what the loan funds are being used for. So if the $100,000 is being used to fit out the new restaurant, and the client has a property that's worth $800,000 and they owe $400,000 on it, even though that's their principal place of residence owned in their personal name, we can do a $100,000 second mortgage against that, because the $100,000 is going to set up the restaurant. I guess where we stand out a little bit, because we're taking security and we're looking at an exit strategy rather than actual bank statements on what the company's making, that's the reason we can lend to a one-day-old company. So if he set up the company yesterday and he needs to fit out the restaurant tomorrow, we can do that because we're looking at the exit strategy of how he's going to pay the $100,000 back through either refinancing the house, or the house is on the market, or what have you, rather than actually looking at bank statements and wanting to see a 6-month or 12-month progressive bank statement that's showing income coming each month where he's going to be able to pay out that way. So that's where we differ a little bit.
Absolutely brilliant. So Danelle, over to you. Do you have any lenders that would look at Bill Smith's scenario that he has been a manager of a restaurant for 15 years? It wasn't his own, he was only managing it, but he's decided now to go out on his own and buy his own restaurant, for better words. He does need finance for fixtures and fittings. Is it something that your lenders can look at? And is it any other type of finance that could potentially be offered to him?
Thanks, Leah. Look, it is few and far between, but yes, there are some options. And we've certainly seen it's really bad to say post-COVID because of our poor Victorians, but let's just say that, in the last 18 months, we've seen that true Aussie spirit. So the amount of inquiries that we're getting through the platform about wanting to start a new business or purchase an existing business have gone through the roof. So that true Aussie spirit of she'll be right and let's take advantage of an opportunity is really strong and actually thriving out there. There is the potential to get fit out finance. And what a lot of lenders will look at in the startup phase is, again, that property ownership, length of tenure in the industry. So Mr. Smith, 15 years, he ticks that box. Property ownership, and also, a deposit amount. So we do have a couple of lenders who will look at a straightforward working capital loan, but the client, well, Mr. Smith needs to have a minimum of 20% of his own cash. So if he's looking for 100 grand to do some fit out, then he needs to really be only looking to borrow 80 and be able to say, hey, I've got 20K in the bank that I'm going to chip into this myself. So to get the whole amount is quite difficult. It is possible, but you're really only looking at a couple of lenders. And again, to sort of speak to the invoice space, again, because it's a restaurant, unless there's a lot of B2B activity where they might be looking after other businesses, that makes that quite a slim picking. So definitely fit out finance, or if they have a deposit amount or a property owner, it does open up the options.
Brilliant. And Ben, I don't think I need to repeat the question for you down there, but if I do, let me know. Whereabouts does OnDeck sit with that one?
Yeah, so firstly, I'll just second what Danelle was saying, receiving a heap of inquiries for situations like this. So yeah, it's interesting to see people trying to take advantage of industries that are thriving now, which is good. So a few ways to look at this for us. So firstly, if he's looking to purchase the restaurant that he was managing for 15 years, we could potentially look at it as long as we can prove to that he was the guy responsible for day-to-day operations and the management of the restaurant. But if he's looking at purchasing a restaurant down the street, unfortunately we wouldn't be able to do it just due to the time of business. So we need them to be a director or shareholder for the applying business for the 12 months, just so we can see a little bit of see the history there, because it is different to running your own business to being a manager.
Absolutely brilliant. And Daz, over to you at Finstro. I'm pretty sure you've got the question as well. Is this something that Finstro is going to have a look at? And if so, what's the terms?
Probably not. Very similar to what Ben said, we'd like to see some history through their cash flow over at least a 6-month period as per our minimum requirements. Where it may come into something that we could look at is what Ben touched on as to whether he could prove that he was the actual day-to-day controller of that previous restaurant. But it sounds like on the question, that's a pure startup, and without that kind of initial history, wouldn't be something that we would look at. We'd look to potentially foster it for 6 to 9 months and then see how we can help.
Perfect. So guys, I'm going to bring in another cartoon character, favourite friend of mine, Fred Flintstone. And look, old Freddie boy, apart from the fact he needs an upgraded car, but he needs finance for stock that he needs to get into his business within the next week or two. However, some of his accounts that are due to pay him are running late. He does have residential and commercial security for this. Is this something you would still look at to helping him finance? And if so, what would your terms be? Cam, I'll start with you.
Yeah, listen, something that's right up our alley, Leah. We want to see a really clear exit strategy, right? So if he's got money owed to him, or he's got stock that he's going to bring in and sell quickly, something that's right up our alley. So we would look at taking a second mortgage over the property. The terms are, we have no minimum term on our short-term product. So literally, if the client had the money for 1 week, it would cost him 1 week's interest, and that's it. He can pay the loan out and there's no more to pay. So we don't capitalise the interest for 3 months or 6 months. We don't have a minimum term of 6 months or anything like that. So we're a real solution-based funder. And that solution cost on our product with no minimum term is 1% a week. So if he legitimately needs money for 2 weeks, he pays 2 weeks interest and that's it. Means the cost of his goods will go up by 2%. But most people that are selling stock out are selling it out at 50% or 100% on their cost price. If that cost price goes up by 2%, it's back to my old can of Coke story, right? You buy it for $1 and sell it for $2. If it costs you 1 cent a week to buy that can of Coke at 1% per week, takes you 3 weeks to sell it. Well, the can of Coke costs you $1.03, and you've made 97 cents in the transaction when you sell it, rather than making zero if you don't have the dollar to buy the can of Coke. So something that we could definitely look at and would fit really well in our no minimum term product, where the client can pay it out as soon as possible.
Absolutely brilliant. Danelle, over to you for Mr. Flintstone. Apart from the fact he needs to upgrade his car, is it a transaction that Lend has somebody on their panel for? And if so, what are we looking at for terms?
Leah, I have to be really honest, and you know that's me. I was absolutely having a coughing fit when you started talking about the Flintstone inquiry. So all I heard, don't you start, Garnham. So all I actually heard was, yep, 1% per week, Coke can, that's all I heard. So I'm not being rude, but can you just start again for me?
Yeah, not a problem, darling. So Fred Flintstone needs finance for stock that he needs to have within the next week or so. Some of his accounts, however, are overdue to pay him. Would you look at that type of finance? So would you still give him finance knowing that he's got residential and or commercial security? And if so, on what terms?
Right, well, this is a nice one. There's about 5 different products that old Mr. Freddie Flintstone can get access to. So good question, Leah. Again, depending on the terms and the quality of his debtor's ledger. So guys, again, remember when it's B2B, it's about the quality of your debtors, not about the quality of your business. So if you've got a strong, if Mr. Flintstone's got, you know, really strong debtors out there that he's waiting on payment for, then absolutely you've got an invoice option. Property, you've got a private lending option, as Cam said. And also, if his cash flow is still reasonable because he's got a handful of clients that are paying on time, then there still is actually the opportunity for a working capital loan as well. So look, this customer could be solved with lots of solutions and probably would need to understand 4 or 5 more questions. And they're really quite standard in trying to point your client in the right direction, which I'm, you know, happy to share with you guys after this in an email. But look, anywhere from a 1-week term with Cam to, you know, a 3-year term as well. So there really is plenty of options. And as I said, it's all about just being versed with those handful. And we're talking about a handful here. We're not talking about 50 questions, just a handful of questions to be able to help direct your client in the right space. And while I've got the chance and I'm not coughing, we really need to understand that this is alternate commercial lending. It is about the solution. We need to stop focusing on rate and focusing on solution. We're seeing a lot of rejections in mainstream lending, and that's mainly because businesses aren't prepared for the requirements. So yes, there's cheaper rates, but do they have a cash flow forecast? Have they got 2 years of, you know, audited financials? There's lots of things that they don't actually have. So we need to be aware that this side of the industry is all about solution and all about giving businesses the opportunity to take advantage of a situation or help them out of a tough spot.
I think it was really well said, Donnie. So thank you for laying that in as well. So Ben, just from your side of things at the moment are on deck, the Fred Flintstone scenario, something you guys could have a look at, or and if it is it on what terms? How does it play with on deck?
Yeah, cool. So in short, definitely something that we could take a look at. Probably one of our ideal scenarios for customers looking to purchase stock. In terms of what we would need to have a look at, and if the broker is not too sure about how the statements might look, is just so for our applications, we only need the last 6 months of bank statements. So it's just, we'll try and get those bank statements up front, just to make sure their cash flow hasn't been impacted too hard by those accounts not paying late. And if there is still reasonable revenue there over the past 3 months, then I can see no reason why we wouldn't be able to do the approval.
Brilliant. And Dad's down from Finstro's side of things, Fred Flintstone scenario for me, mate, something you guys would have a look at, or is it something you'd pass on? And if you look at it, what's the terms you'd have a look at it on?
This is a bread and gold kind of scenario for us. We can help on 2 versions of this scenario, whether we look at funding the debtor invoices or whether we look at funding the supplier invoices. Ben touched on it. What we would look at is setting up a facility limit based on the average turnover, as I've mentioned before. From that, the client would have the choice of either funding 80% of one of those debtor invoices, which gets the money straight into their account so they can use that money to pay that supplier, or we could fund 100% of the supplier and they'd have 6 months to pay that back. If we're going to fund the debtor invoice at 80%, we give you up to 90 days for that. So as long as those invoices are still within relative terms of the original arrangements, let's say 15 days and they're out to about 20 odd, you know you're going to get the money around about 35, 40 days. That fits within our 90-day term period. So we'll give you 80% of the 10 grand, 8 grand. That 8 grand could be used to purchase the equipment. If you want to go the other way around, you can utilise the supplier invoice where we'll give you up to 6 months to repay that back. Ultimately, depending on what you've got on your limit, you could use both options. One, to bring the money, drag the money into your cash, into your account, and the second way, not to send it out too quickly. So you can utilise both measures to certainly build up your daily cash business. And like I said, this is just bread and butter for us, so it'll be perfect.
Absolutely brilliant. So guys, a couple of really quick questions now, being mindful that we are getting close to time. Actually, we've gone over time, but I won't tell Mariah that. She can't see me at the moment because she's hidden behind the scenes. So what we're looking at the moment, guys, are really quick questions, simple yes or no round. Is there anybody, so let's go a raise of hands here rather than a yes or no, because we'll all end up talking over each other at the moment. Is there anybody on this particular panel that can lend for the following? A hobby farm. Oh, we've got 2 takers. B, a non-income producing farm.
So for this morning, I'm just going to show you guys what a broker is.
Cammie's in.
How they would use the platform.
Danelle's in, and Airbnb.
So any questions, just let me know.
Oh, come on here, guys. The Finstros and the OnDecks are letting the team down. A startup company that is less than 18 months old. Oh, look at that. We've got all in. And guys, the last question I'm going to, well, actually, there's 2 more questions I'm going to ask you really quickly. First one first, what are the main things that you look for on an exit plan from a broker? So Cam, I'll start over with you again. What is critical to you on this exit plan?
Yeah, and this is real critical for us, right? Because we don't look at BAS statements, we don't look at tax returns, we don't look at 6 months of bank statements to see what money they're coming in. So we need to see an exit strategy, how they're going to get out. So typically it's a refinance. People are refinancing and don't have the time that they need to get the refinance done. So they need us to bridge that gap for them, or they might need a tax debt that needs to be paid before the refinance can happen. So the vast majority of our loans are refinancing because they have equity in a property, which is what we're happy to lend against.
But just to
is that Mariah?
No, that's Georgia in the background for Danelle.
Oh, Georgia.
At least we know that one of them's working today.
Yeah, well, Georgia's the only one that does any work at Lend, let's be honest.
Dee, do you want to go to mute for me?
I don't know what I was saying. Exit strategy, usually a refinance, the property's on the market being sold, they've got stock that they're selling, they might have won a new contract and they're going to get paid 30 days end of month. We do need to see something, but that is a legitimate exit strategy rather than I need to borrow $50,000 for business cash flow and I'll pay it out in 6 months' time through business cash flow. We do need to see a genuine exit strategy.
Perfect. Danelle, from your side of things, you can unmute yourself now, it's safe. Exit strategies for Lend. What are the key things you're looking for on an exit strategy coming in from a broker?
Oh, look, for us, Leah, exit strategy is really lender dependent. So I think for us, what we're really trying to do is push the advisory piece from our brokers. So for us, exit strategy is more about how they're going to get their client into mainstream funding when they've been able to achieve the goals that they need right now. So for us, it's about looking after their client and taking on that advisory piece. As far as exit strategy for the loans, that's really dependent on each lender. And I'm standing outside in the rain now.
Yep, I can kind of hear a little bit of background rain going on at the moment. God bless you for actually making sure that we can keep the show going from Len's point of view.
Oh, yeah.
Ben, down to OnDeck, Ben, exit strategies. What are the key things that OnDeck's looking for in an exit strategy?
Yeah, so with us, we don't require an exit strategy for our applications. As I said, we base our approvals on the bank statements. For some of the larger deals, or if it's sort of not typically in our space, say if they're looking to pay out the ATO, we will ask a few more questions and really make sure they've got a good plan there if the tax debt is really high. But I'd say 95% of our applications, we're not concerned with any exit strategy.
Is it safe to say, Starkey, though, with the bank account statements, if there's repetitive transactions that are on there, you're going to want a fairly good explanation as to why they're happening?
Yeah, so if it's seeing, say, internal transfers or it's coming from a related entity of theirs, we'll ask those questions. Or if they're just getting payments from the one customer, if they're in, say, construction, we might ask for like a contract or what the work's for. Ideally, it'll be for a number of different jobs and all over the place. We'll just ask those questions up front and get a clear understanding of what they're doing.
Perfect. And Daz, down to you, the exit strategy for Finstro's side of things, how critical is it? And if it's not critical, are there any key things that you're looking for with these transactions?
Aside from repayment, it's not that critical strategy. Because what we offer through our invoice funding and also our cash options, we treat it like a line of credit. So for every single invoice that you do, when we look at funding a debtor invoice, we're not looking to fund the full ledger, we're only looking to do the single invoice itself. So the whole option with us is that real line of credit mentality of in and out, in and out, in and out. So hence the reason why smaller limits sometimes can extrapolate out to huge lending amounts, because the client will take that debtor invoice, take it out for maximum 90 days, pay it back, and then redo it again and then again and again. Similar with the supplier invoices. So from an exit strategy of the facility, we don't need one because it is per invoice. And with the facility being ongoing and evergreen, no annual reviews, it's there forever and a day. The client just needs to be able to utilise it themselves or ring up us to help them through the process. So no exit strategy.
Brilliant. And guys, wrapping it up for this round as well, really quick answer for me. Being that we're almost at the end of financial year, we know that it's cracking on. It's 15 days away from us now. Will you lend for ATO debt, Cami?
Yeah, most definitely. One of probably the biggest time of year for us is just before the end of the financial year and just before Christmas. So yeah, most definitely. As long as it's business related ATO debt, we can definitely lend for it.
So no child support debt for you?
Well, no, I've got my own issues, let's be honest.
Janelle, from your side of things, have you got lenders on board that will lend for ATO debt other than Strive?
100%. A lot of the cash flow lenders, a lot of the debtor finance guys will do it as well. So it's all dependent on the size of the ATO debt versus their revenue. So that's something that's really important to keep in mind. And also, you know, whether that ATO debt is under arrangement or has been kicked under the rug for the last 2.5 years, that will have some sort of effect. But yeah, look, 80% of the guys on our panel will lend for ATO debt.
Brilliant. Benny, down to OnDeck side of things, ATO debt, I think it's something that I know that OnDeck will have potentially have a look at. Is there a maximum amount that you'll do though?
Yep. Yeah. As you said, we can definitely take a look at it. In terms of maximum, we generally sort of like no more than 10% of their annual turnover being in ATO debt. Any higher than that, we'd probably just ask why. So they had an accountant who wasn't up to scratch. Any other reasons like that? Good to see. As Janelle said, if they're on a repayment plan and we can show they're actively trying to drop their how much they owe, then that's good signs as well.
Brilliant. Daz, down to you from Finstro side of things, wrapping it up for this hour. ATO debt, talk to me about it.
Not a problem. ATO debt's fine. Any BAS payments are fine. It all relates to the facility limit that we've approved against the monthly cash flow. We will look at something that's Ben mentioned that it's been outstanding for a while. We may ask a few more questions, but in essence, no, we're happy to look at either option.
Perfect. So guys, I do want to thank all of you for joining us on this morning's panel session. Hopefully the brokers in the room have taken something away from that. As I said earlier, all of the contact details for today's presenters will be sent to you at the end of today's wonderful e-webinar. But guys, thanks for joining us today.
Thank you, Legend, for having us.
That's all right, Cam, anytime that you want to put tracksuit pants on and end up on a call with us. So guys, I do want to welcome Nicolette Spicer up onto the floor with me now. Nicolette is from Assured Counselling, who's going to be presenting today on easy, healthy habits on behalf of Suncorp Bank. So Nicolette, please join me with your wonderful video camera on board. And it's great to see you back here with us again. I feel like it's been forever.
Been too long, Leah. Thank you so much for the opportunity.
Not a problem, mate. I'm going to hand straight over to you.
Wonderful. Now, I do have a little presentation that I am going to share with everybody, and understanding I've got 5 minutes, so just forgive me if I do race through it. But the purpose of me coming on today is to talk to you about what is available for you guys as brokers in terms of free confidential counselling, but also to offer you a couple of free tips and tricks to optimise your mental health and well-being. Now, understanding most of you are in Victoria at the moment, the levels of anxiety over the past 12 months, and again for you guys being in lockdown, have been awful. But sometimes there are things that you can do, and one of them is to reach out for support with us. So we're offering free confidential counselling. We've got great availability of clinicians. You get 4 sessions a year to talk about anything that is bothering you, whether it be workplace or personal. And speaking from experience, it is awesome to get things off your chest. You also have the ability to talk about positive aspects of your life that might need improvement. So helping yourself go from good to great and optimally flourishing. Financial coaching, obviously you guys don't need that. We also offer legal advice too. But what I want to touch on and just to share information on is around that wellbeing coaching. So at any time you can ring us and speak to a psychologist about getting yourself out of a rut if you're in one, or helping your sleep improve, improve nutrition, or do some exercise, set some goals. And I think being able to talk to an experienced clinician is awesome, and Suncorp's paying for you to have access to this. It's only ever a phone call away. The number to ring is 1800 808 374. Now, my background is in corporate health. I'm not a psychologist. I sometimes wish I was. I do work with awesome psychs, but what I can share with you are a couple of little strategies that can assist you with improving your mental health and wellbeing. If you don't need counselling, good for you, but sometimes, and many of you on this call will know all about this simple stuff, but there's a few strategies that you can implement, and the first one is around nutrition. Now, insert prop. You've got to have 2 bits of fruit, right? So I've got my 2 mandarins here. Obviously, as the proud promoter of health and wellbeing, I'll need to also find 5 vegetables a day to have in my eating plan, and encouraging you guys to do so as well. So you find your 2 bits of fruit, your 5 veggies every single day. When you're shopping in the supermarket, make sure you shop on the outskirts. Lean meats, nuts, seeds. So not looking for packaged foods, like every now and then, and I don't want to be a wowser, you can make weak nutritional choices and get your Uber Eats, eat your takeaway food, but what we're recommending is that eat what Mother Nature intended you to eat. Exercise. Each of us need to do 30 minutes every single day. A little bit of huff and puff, a little bit of stretching, and lots of us are desk bound, so all you need to do really, making sure your headset's not too tight, you just do some squats, right? Just do 10 of those squats, couple of lunges, a little bit of stretching, some deep diaphragmatic breathing. Lots of us don't breathe enough, and sometimes anxiety, having suffered from it myself, is all about shallow breathing. So just taking the opportunity to sit up tall at your workstation, good on you, Leah, lower your shoulders and inhale for 4 seconds. And I just want everyone to do it with me now. So we're just going to inhale for 4 seconds. Let's go. We're going to hold it for 4. And then we're going to exhale for 4. Now, if you repeat that 10 times, if you are feeling elevated, angry, overwhelmed, that is going to help you calm down. Trust me, the psychologists have validated that. Hydration. Now, this is key. Cam, I was a little bit sad that you used an example around a Coca-Cola can. To be honest, we don't need any of those drinks. People, we don't need sugary drinks. We don't need energy drinks. All you need is water, maybe a little cup of tea or a coffee in the morning, and we need to reduce the alcohol intake. I think the Heart Foundation recommends only 1 or 2 standard drinks a day with alcohol-free days in there too. So without being a wowser, what I'm encouraging you to do for your own mental health and wellbeing is to optimise hydration. So a couple of litres. I want everyone to be able to have their water bottle at their desk so they're sipping the water throughout the day. Now that's going to help you get a better night's sleep, reduce the possibility of headaches, reduce hopefully the onset of anxious thoughts as well. The next item is about connection. Hanging out with people who drag you up instead of those toxic people who drag you down. Sometimes you just got to cut them. And I think being able to have a counselling session with a psychologist, they're going to tell you the same thing as well. Start hanging out with cool people. Maybe you need to join a club. I know it's been really hard being in lockdown, but sometimes just be mindful of who you are actually hanging out with and try and find a laugh, try and find some funny things. One thing that I loved was Peter White's Christmas video on LinkedIn. I have not laughed so hard, seriously, for months. It gave me so much pleasure. And I also think being invited onto these chats as well, there's always something funny. So try and spend time with those people who drag you up and give you a laugh, and people who find the joy. So one thing, if you're going to take out of my talk today, is go and find something funny. I mean, Leah, you are hilarious. I think just listening to you is a good laugh. Device free. Lots of us are becoming lonely and socially isolated, yes, because of lockdown, but also because we're spending so much time on Instagram, Facebook, LinkedIn. We're losing touch with people. So I think finding someone to ring up, ask them how they're going, or meet them in the park when it's okay to do so. Hug someone if it's okay with them, not to be creepy, but get back and find some connection. The epidemic of loneliness is actually a real thing. So just be mindful of who your connections are, and reach out to them when appropriate to do so. Being grateful for good stuff. I know lots of us have worries and woes, and many of us are depressed and anxious, but I think being grateful for the little things that we have. So before you go to bed at night, just think about three things that you're grateful for. Think about writing someone a letter and telling them, what a positive impact they had on your life. Finding a mentor, another great way to improve your mental health and well-being. Reflecting, taking the moment to just have a little bit of time out without looking at what your mates did on Instagram on the weekend, but just being mindful, learning to be present, doing some of that breathing that we did before, and just taking the time to reflect and to work out how you're really feeling without racing around and always being so busy and accountable to everybody. Reaching out for support if you need. So we talk about at our work a mental health continuum. So, some of us down this end are really struggling, can't sleep, feel depressed, overwhelmed, to up the other end of the continuum where we're killing it, eating all the right foods, exercising, setting goals, just, blitzing in life. Just to remind everyone, we fluctuate on this continuum. And if you're stuck down here, or if it's a family member, you guys are entitled to this free confidential counselling support. And it's just a matter of ringing 1-800-808-374, and our clinicians will be able to assist you and pull you out of that. And look, if you don't ever need, these counselling sessions, just remember that there's access to great little tip sheets on getting a better night's sleep on our website, learning to relax, understanding anxiety, whatever it is that's bothering you, there is support available. Any questions?
I just had to remember to unmute myself then so I could be my funny little self in the background. I haven't got any questions that come up in the background, but I will note, guys, that I have taken a lot away from Nicolette's session today. So I'm going to post up the tips from Nicolette's session in our Facebook group. So that is the FBAA East Coast members Facebook group, where I will have a chat with obviously all of you on the points that Nicolette's raised today, because I know that and notes that I've written next to me, I suck at drinking 2 litres of water a day. And I know I'll own it. Sitting next to me at the moment it's 11:30 now. I've only had one. Oh, my cup's now missing. I've only had one cup of coffee today, and that's definitely not enough by 11:30 in the morning of fluids going through my system. Cam, I'm with you on the can of Coke, though. The cheeky can of Coke never hurt anybody, especially mixed with bourbon. But, I think it's for a lot of people to have 1 or 2 drinks a day. Sometimes we look at and we go, you know what, that's not a problem. But they do say with Alcoholics Anonymous, not that I've ever been, but there's been some reports online that anything more than 2 drinks a day actually deems you as an alcoholic. So there's some scary thoughts behind that. Something I've got to get better of as well is being device free. I know that my partner and I have now agreed that on Sundays we generally go device free from about 9 till 3. He understands with my job I do need to check in on emails, but 9 to 3 is our time. Where we don't have devices with us. So that's become a big step for me. And he also threatened that he would do strange things to my phone if I didn't do it. Gratitude, I've got to get better at that. 3 things I'm grateful for each day. And I'm going to remember to do that, obviously, just before I go to bed. I think that's a good time for me to do that. I do suck at having TV on and phone on in my bedroom before I go to sleep. So I've really got to get better at that. And, you've given me a lot to take away from today, where I will be practicing. As of today, I'm going to start practicing all of this, although I am on tour with Cameron later this week, so I can't guarantee that alcohol won't be involved. We're heading down to the Better Business Summit. And these are things, I think, guys, for everybody that's on today's session, they're quite simple changes that you can make in your life as well, and they're not going to be hard to implement. So even if you start by taking one thing away from the list and doing it, something is better than nothing.
Good on you, Leah.
So get out there and have a crack at it. But like I said, I will put the points up in our East Coast group shortly after this session today. And if you haven't checked in on Facebook, we do have it as FBAA East Coast members. So feel free to add yourselves to the group. And I will put you in there. It's not one of these groups that's going to bore you and baffle you with a whole lot of noise. It's a whole lot of fun between the East Coast members, ranging from our friends down in Tasmania all the way up to our friends in Cairns. So there's a lot of good banter, as Nicolette said as well. There's a lot of good times spent in there with a lot of laughs as well. And generally taking the mickey out of Peter, and I can say that because he's not on this call and performance reviews are due in June. So guys, moving right along now, Nicolette, thank you so much for your time this morning. I know that it has been busy over at Shore recently, so we'll let you get back on your way. And guys, if you do have any questions that you're not comfortable asking within this group as well, you can send them through to myself, or again, at the end of today's session, we will give you Nicolette's contact details and you can ask some questions there. As she did highlight, the counselling sessions through Assured are completely confidential. We do not even see your name. All we get told is that there is a person that has contacted them, or it's been one of our brokers that's contacted them. As we said, that's also available to your family and your staff members as well at the moment, with the view that it will go to greater industry by next year. So we are very thankful with our relationship with Suncorp, who do sponsor our Assured program for us. So Nicolette, thank you very much for your time this morning. So guys, cracking along at a very slow pace this morning. I do understand we are running a little bit behind time. I will get Brett Spencer to join me on the floor, our absolutely massively newly appointed state president down there in Victoria. He was relieving for a short interim period, and it has been made official that Brett's now on board as the state president down for Vic and Tasmania. And I know that Brett enjoys a good trip down to Tassie, so we're going to be doing some planning to go down and see our Tasmanian friends as well. Brett, I will hand over to you, and I'll also let you introduce your new councillors to us. And obviously they're going to give us a great update now of the Victorian and Tasmanian market. So over to you.
Well, thank you, Leah. I will not drag on like you tend to drag on and keep talking longer than I really need to. We were going to have our Vice President down in Victoria, Sadish, have a discussion this morning, a chat about Google Ads and Google reviews, but unfortunately he has not been able to join us. His office has got broken into last night, so he does send his apologies, and we will push that presentation to the next summit, maybe tomorrow or the next event. But we do have two of our other new councillors down here in Victoria, and the first one who's going to present for us today is Marius Rocker from Low Market Group, who was previously a council member a number of years ago, is now back on the council again to support the goals and visions that we've got. So I will hand back over to Marius, and I think Marius is going, I'm not sure what Marius is going to talk about, but he's going to talk to us for the next sort of 5 minutes or so.
Thanks, Brett, and welcome everyone. Welcome to today's session. Yeah, I'm not sure what I'm going to talk about either, Brett, but I'll give it a crack. Actually, really excited about, and honestly, really excited about being back on the council. I think we've got some really strong councillors. The great thing about the FBAA, I found, which is the reason why I agreed to join and come back again, was you know, we talk about the industry bodies being for brokers, but nothing better than to have an industry body with brokers on it, people who run their own businesses, who know and understand the everyday problems and bottlenecks everyone faces. So when you're and I implore everyone, you know, reach out to any of the council members, even if you're looking for some advice around what to do, when to do it, how to grow, how to deal with particular client scenarios or client problems, whether it be growing your business, downsizing, or doing whatever it is that you need to do. Quick background on me. I've been in this industry for 22 years. I was really lucky to start when I was 5, but that's not true. 22 years ago in the industry, you know, I've been through, you know, the ebbs and flows of, you know, first homeowners grants, industry building, interest rates when I started in 99, they were 6%. You know, it got up to the to the mid 9s just before the GFC, and then we've seen them starting to flow down ever since. My business has always been standard residential lending, do a little bit in commercial and equipment finance, and have built teams, downsized, bought into accounting firms, sold out. So I've done a variety of things. At the moment, we have a team of 2 brokers, 3 support staff, and we're just growing the support staff overall to help with our growth and continue to allow myself and my other business partner, Daniel Koutsamanis, to build our business. And although it's residential, I specialise more so with self-employeds. I know and understand self-employed deeply, the structures, whether it be sole trader, company structures, trusts, family trusts with corporate trustees, individual trustees, self-managed super fund lending, the variety of stuff. And what I find is a lot of people get tripped over what can and can't be used when you're looking at self-employed financials. And we've seen a big shift over the last 15 years of people going out and registering an ABN and going out and working on their own as a one-man band. So it's definitely a space that I work in predominantly. Our focus and my focus in our businesses has always been on lending strategies. So we don't go out and get loans for people. We actually build lending strategies for people, and we keep on reviewing those lending strategies as we move forward over the years, which is why everything we do and our growth has always been purely on client referrals. We don't have any paid referrers or anything like that. It's always been, if by virtue that our client is an accountant, they'll start sending referrals through. If they're real estate agents, our clients, they'll send referrals through. But that's how we've always built our business. I've been lucky enough to win some industry awards, do about 70 mil a year, and happy with what we do. But in terms of the industry and what's going on in the marketplace right now in Melbourne and Victoria overall, we're seeing a massive influx, as we've seen across the country. Inquiries have risen by about 30%, 30 to 40%. There's so much money in the government grants. People are falling all over themselves, and the stamp duty concessions that people are falling all over themselves, trying to get approvals put in place so they can go out and buy. And everything we're doing is just trying to help clients understand that, when their applications are being delayed, they're not actually special. The client isn't special. It's happening to everyone. And we build all of our expectations at the moment around the long service levels that we're experiencing with the banks, whether it be through approval stage or post-approval stage through to certification of documents and settlements. But we're seeing a massive amount of people coming back to us looking at interest rates and the ever-changing policies around discounts in interest rates rather than interest rates going up and down. It's all about the discounts that the banks have approved for them. So people are coming out in this generation that's coming through now are well aware of mortgage brokers. They choose mortgage brokers first over banks. So we're seeing a lot of inquiry around that, and refinancing. People are now becoming more aware, and we're seeing that trending up in this generation, understanding that they should be going out and talking about interest rates with their broker every couple of years, because within 2 years, the discount in their rate is no longer sharp. Now, what you used to get 1.5% 2 years ago is now not even close to being competitive. So we've got a lot of stuff that gets automated in our business. And if we're not talking about interest rates and reviewing, our clients are doing that with us automatically. But really great space that we're in at the moment. The entire industry is coming back to us. Sorry, our client base is coming back to us and asking us to review and build this strategy for the next couple of years. So it's a good time to be in this industry, I think. Lots of inquiries, people understanding brokers are the place to go. And there's lots of activity going on at the moment.
I think that's a really good point there, Marius. You talk about where we're at, and I'll talk a little bit about SLAs and timings in a minute after our next presenter. But I'd encourage all of you to reach out to Mario or myself or any of your other council members if you just need any help or talk. And you can see Marius has had a great depth of experience, and particularly in that self-employed space, he'll be able to help you guys out a lot. So Marius, thank you very much.
You're welcome. Thanks for having me. And yeah, like I said, anyone, feel free to reach out to your council members. Even like a mentor to run scenarios through, or even get some advice on what to do next on your next stage of growth. Always happy to help, and we're here for that too.
Well, thank you, mate. Well, I will now pass over to another new councillor of ours, Mr. Nathan Taddeo, who's been around for a long time. He's a good friend of mine and a good friend of a lot of people in the Victorian industry. So, Nathan, I'll hand it over to you. And it's good to see the ray of sunshine. God has just shined that down on top of you in your video, because you are a bit of a golden boy, right?
And Mario's joked about being around since he was 5. I quite literally have. I was along with a loan document sign-ups playing yo-yo while Dad was trying to keep the clients, get the clients signed up. So yeah, I absolutely have been around the industry since 5, but obviously not working since then. That wouldn't be too would go down too well. But yeah, have been around for 12 years actually involved in the industry, and happy to be on board now with the FBAA, or as I call it, the People's Institute, the People's Institution. Really stoked to be part of this and do whatever I can to help not only the industry but people individually. So as Marios mentioned, yeah, we're here and available to people. I guess for myself, I changed things up late last year. Sold on the family business and joined a fintech and an app to start their broking arm. So we also at the time decided to change aggregators as well. It just fit in with what we were trying to do. I guess the key theme is SLAs, and what we try to bring to that is, and similar to what Red touched on earlier, it's not, we don't, from a fintech side, we don't think it's about trying to remove the broker's role or trying to remove the human side of it. Far from it. What we're trying to do, though, is make it a better experience for the client so that the human can concentrate on doing what the human should be doing, right? You shouldn't be sitting there having to input data and go through everything else. You should be able to just focus on building your rapport with your clients, understanding what your clients want and need, and then do the right thing by them. The rest of the stuff should take care of itself for you, and shouldn't really just take hours away from what shouldn't be there. Thanks to everything that's happened in the industry, a lot of it good to clean it up. But the fact is, it's also made things a bit harder than they necessarily need to be. So what we're trying to do is work with our aggregator AFG and then all the tech that's out there now, so the brokers can concentrate on doing just what they should be. So I guess what one of the big things I can help people with is what's available to them to try and improve their processes and just make things a bit easier for them. So I do offer that offer that branch out to people if they want to reach out and sort of understand what we use and why, what's working, what's not working, or where it works. And just sort of have that conversation, because I guarantee a lot of you probably could be doing things a bit better, even we could, right? But we're actually taking the time to experiment with that, see what works, and implement it all and make sure it all speaks to each other as well.
So no, a lot of people are scared of the word fintech.
Sure.
The fintech are going to take over their clients and take over broking and all this sort of thing. Can you give a 30-second snapshot to all the brokers here today and everyone online of why fintechs are not big, bad, scary, competitive forces, and where and how fintechs can and do help the brokers today and what they're doing?
Yeah, I think it's just a scary word, just because it's so broad, right? So you might think, is it something like a TikTok loans, which I believe Adelaide Bank backed, right? Well, they say they can do a loan in 20 minutes. Now, I don't think you should be able to spend $1 million in 20 minutes. I really don't. But the idea around that of, okay, taking the hard bits away, because the tools are there. So I see tech as a tool, just like email, right? So email now is just it's what we do every day, right? But if you told our dads that 30 years ago when they were at lunch, without even a mobile phone, that's how you'd be doing your loans, it just wouldn't be happening, right? So I think if you look at it as that, as a tool, and it's supposed to help you, not actually take away from you being you, then it shouldn't be scary. Yeah,
that's a good point. That's a really good point.
Yeah.
Well, I want to thank you for joining the council this year with me and coming on for the journey in the ride. It's going to be good fun. And everybody just reach out to Nathan. There are a couple of our other council members online. I can see James Angus is online as well. There he's waving. And there's a few more. I think I saw Belinda Jane was on as well. There was a few that I've seen online. So you'll all get, there's an update to all of our council members coming out, and reach out to any of us. We were due to start a whole range of face-to-faces, but of course, thank you to the lockdowns and the continuing struggles we have down here. Those have been pushed back further again. I think we'll start looking at coffee meetups in July, after the second half of July, or maybe in August after the national conference, just depending on how we slowly come out of the latest lockdown here in Melbourne. But keep a lookout for all of those updates. They'll come out from head office, and we're hoping that we can start seeing you guys in the flesh and having those coffees and get some of our sponsors aboard so that we can sort of get back to working in the new normal, getting back to face-to-face. As Nathan said 30 years ago, his father and my father would never have thought of having a Zoom call like this. When I first met Whitey 25 years ago, we'd never have thought we'd be doing Zoom calls like this. So this is the world we're in. They're not always fun, but we are pushing through, and us Victorians are more resilient than everybody else, including you Queenslanders who are complaining about a little bit of rain, a little bit of cold today. Welcome to our worlds. So speaking of someone complaining about the rain and cold, I'm going to hand back now to the lovely Leah, and she will take us out for the day.
See, the hard part for me to say this, Mr. Spencer, is I'm not overly complaining about it. We only get 1 week of winter up here, so I don't think Queenslanders have a great deal that we can complain about.
Exactly.
But Brett, thank you to you and obviously the boys down there for their market update this morning. We're looking forward to many more of them going forward as well, and hearing from our councillors down in the Vic TAS region. We've got some great guys that have joined us down there for the ride, and looking forward again to seeing you and your team at the National Conference in July.
I will be there with costume on, yes.
This scares me. This absolutely scares me. But guys, like we said, if you've got any questions at all regarding the FBAA or anything we do, Marius has also thrown the gauntlet open for anybody that may have some tough scenarios or anything like that to get in contact with the team down there or myself and let me know. We're more than happy to help out where we can. And I did say it at the past PD Day that's also happened down in Melbourne. Sometimes it's easier to have a chat with us first before you take it out on social media against the industry. So don't be afraid to give us a call or shoot us an email and say, hey, I've got this problem, before we all become keyboard warriors and take it out on each other, because there is some sound advice and a lot of years experience behind the committee that's now down there in Victoria and also up at head office as well. So guys, thank you very, very much for your time this morning down there in Victoria. So guys, that is going to bring us to a close today. And I do apologise, we have gone a little bit over time this morning. Obviously moving back onto eSummits, we readjust to the new world and the platform world that we're now working on. Before we do close off though, we do have a few quick notes to cover. Firstly, we'd like to acknowledge our national sponsors again for their time and support of the FBAA. You will receive all of their contact details in the email to follow the session. Secondly, you're also going to be receiving a code for 1.5 CPD hours and a short survey that will follow this session. Please remember to provide us with your feedback. It will enable us to be able to put more sessions like this together, and it'll also give us an idea of the things that you want to hear from the FBAA, so we can plan for that as well. Part of that I know will be that you will love having me as an MC, but you will get to share me with Mr. Spencer as well. So you do get both of us as a sideline act for Victoria and Tasmania. I can't guarantee that's going to end well for all of you. So guys, we do appreciate your time and your support with that, but the more feedback you give us, the better these sessions are actually going to be. There is a session on tomorrow from 10 till 11:30 that Mr. Spencer will be hosting for me. I will be in transit down to Adelaide for the Better Business Summit that's happening on Thursday. So Brett will take over the reins and hopefully won't talk as much as I do.
It won't be as good as yours.
You know how it goes. Guys, if you can join into that session, Senator the Honourable Jane Hume will be joining us to talk about open banking and digital finance services environment, and that'll be with Brett and Peter tomorrow morning. This Thursday is our Q&A with Whitey, so if you do want to join in on that session, it is with Martin Lamb, the co-founder of Lendy, and he's going to be answering any questions you have about using technology within the industry. You can register via the FBAA website under the upcoming webinars tab. There's also recordings of all of these sessions that will pop up on our YouTube channel, generally within 48 hours of an event taking place. We do need to give Mariah a little bit of time to correct all of the faux pas that we make on these calls before we do go live on YouTube. On your screen at the moment, you can also see my two favourite things in the whole wide world. The National Conference promo is on the 30th of July. It is down at SeaWorld on the Gold Coast. Victoria, in you, we trust that you will get out of COVID and you can get up here for that national conference, because God knows you'll all need a beer, a glass of water for Nicolette's purposes at the conference, or a glass of water spiked with lemonade perhaps. So we would love to see you guys up at the national conference. The gala dinner is that evening over at Movie World under the theme of Heroes. and villains. And really excited about that. We were over there yesterday working out the final productions for that show as well. So for those of you that are joining us for a conference for the first time, it is not a sit-down wanky gala dinner at all. There is nothing overly formal about it other than the Awards of Supremacy, but there is a lot of live entertainment. We are opening 3 of the best thrill seeker rides over at Movie World on the evening as well, with plenty of food, drinks, and a great time for everybody to celebrate being back face to face. And having that relaxation moment that Nicolette mentioned earlier was so important to us as well. So guys, I'm going to sign off for now. Have a fantastic day, everybody. It is obviously still at the beginning of the week, so I do hope you all have really good weeks ahead. Please reach out if you need anything at all. My name is Leah Renwick. I'm the East Coast Manager for the FBAA, and I hope to see all your smiling, beautiful faces soon. So see you then. Bye, guys.